This is Daniela Cambone for Kitco News, and we are starting our coverage here at the Vancouver Resource Investment Conference. Joining me now is Gordon Chang, a speaker here at the show and a columnist for Forbes.com. Gordon, thank you so much for being with us today.
Thank you.
So Gordon, I'm really excited to speak with you because you definitely have a different perspective when we're speaking about China. I'm usually used to interviewing people who are quite bullish on China, but you have a different perspective.
I do, because, if you look at China over the last 35 years, there's been tremendous growth. But that was caused by certain conditions which either no longer exist or are disappearing fast. And I think that the Chinese economy hit an inflection point probably in September. And what we're seeing right now is slowing growth, but we're also seeing plunging property prices, declining industrial production, troubles throughout China's export belt. And it's, I think, indicative of a new super cycle. And this time, the super cycle is not up, but it is down.
So obviously this is bad news for the industrial metals in your point of view?
Well, what's happening really is interesting is that as consumer demand in China is either stagnant, what's happening is that China is not importing consumer goods like it was before. So in order to make the import numbers high enough, because they don't want too big of a surplus because that causes political problems, what's happening is that Beijing is now starting to stockpile commodities like crude oil, copper, iron ore, in order to boost its import numbers. And so therefore you see this surge of commodities going into China, which I think is stockpiling by the part of the central government in order to massage its trade numbers.
Okay, so still good news for the commodities on that front then?
Definitely. And we're going to see that for a little while longer because China is not importing the consumer goods, and that is a sign of weakness in the economy. Now, eventually, of course, that's going to catch up with Beijing, and you're going to start to see declines in importation of materials. But for the moment now, it looks really good.
Now, you're going into a debate with Frank Holmes on this very topic. What do you think is going to be the hardest punch he's going to bring?
That's really hard to say. I don't know what he's going to say, but I've just listened to a few moments of his presentation now, and he's basically said, well, I've been to China, the cities in Beijing and Shanghai look big, and actually that was my first reaction when we moved there in '96. I remember my wife talking to her mom on the phone and saying, China's not communist anymore, because you could see all the growth and the progress. But China is still communist. And what we're seeing right now is a very worrying reversal of reform, starting to moves to close up the economy. So all that these tactics that created this growth in China are now being reversed, and that's a very bad sign. You just can't go to Beijing and Shanghai and ride the maglev and say what a wonderful country this is. You have to see the entire country, because China's a really big place.
Now, Gordon, I know you spent quite a bit of time in China. Let's move on to the topic of gold now. What are the consumer buying habits? Are they still very open to gold?
Especially in the last couple months, we've seen this surge of importation of gold into China, and a lot of it is consumer driven. And I think part of it is because, of course, there's an increase in wealth, and so people want gold. But that doesn't, they've been wealthy for quite some time. The question is, why are they buying gold in these quantities right now? And I think largely is because there's a concern about inflation, which is much worse than Beijing is willing to admit. For December, they said the inflation rate was 4.1% for consumer goods. It's probably double that, and the food inflation is much higher. And I think people are really worried about that. Now that they've got the ability to buy gold, they're buying gold in big quantities. And I think that's a sign of concern on the part of local Chinese about what's going on in China.
All right, so inflation, a big price driver for gold. What other factors are you looking at that might help the price of gold?
Well, for China, I think that there is also a concern about the general direction of the economy. But if you step back and look at the world, I believe Europe is going to trigger a crisis probably this year.
Right.
We're going to see problems that are going to ripple throughout North America and Asia. And so, in times of crisis, you're going to see people go into precious metals. And so gold is certainly going to benefit from that. I think that gold is probably going to move upward. I'm not an expert about gold, but just generally looking at the way the economies there are going, there's real concern.
Do you have any price targets for 2012?
No, I'm not that, but I think it's generally going to be up, just because if you can look what's happening in Europe, and also, as I mentioned, the deep concern about the Chinese and their own economy.
Gordon, thank you, and good luck on that debate with Frank Holmes.
Thank you very much.
And thank you for watching Kitco News. Stay tuned for more coverage from the Vancouver Resource Investment Conference.